Hi, and welcome to the Investing Chartered Accountant. One of the most watched videos that uh, has been I put out there is all about Greggs, the UK sausage roll seller, and I've had quite a ride with Greggs, and I call it the sausage roller coaster because it goes down, it goes up, it has been quite something. So let me go through where Greg's currently is. It recently released an update of its Q4 position, so that was released on Thursday, and I thought I'd take this opportunity just to put a video out there with my own thoughts. This is not investment advice. Please do your own research, and I hope you find this useful. So if we take it over a year, you can see this time last year, it was up almost £28 before the big fall, down to 20. So you can see the general trend as it gets down here is a slide downwards, and it's over Q4 last year. You can see it climbed just above the £17 mark before completely crashing down to more like £14. And as you can see from here, where it was up close to 28, that's pretty dire to almost halve your share price within a year. So you can see it's been quite rough for Greg shareholders, and you can see my own position here at £15 and 66 pence, really, for all intents and purposes. So as it's fallen down to here, it's pretty grim, but we've had some steady recovery coming back. And if I just take you to the recovery position where it was coming in, pushing £18, the news came out, and you can see that post the result, it's been dropped quite a bit on the share price. And everyone's probably wondering why. Was the result being released particularly bad for Greggs? What's going on? And hopefully I can give you some insight into where Greggs currently is. It has to be said that Greggs is heavily shorted. It is the most shorted UK stock currently, and that's why we can see big roller coasters in that share price. You can see that just in a week where it's sort of progressing very nicely up towards £18, coming from just below 17, and then that massive drop as it pushed and the shorters get it down to 16 with some recovery coming through before pretty much flatlining on Friday. You just need to see, here, up, down, back up. These spikes is where the shorters really take full advantage. And it makes it very difficult from a shareholder perspective to sort of know whether you want to hold it or not hold it. But what did Greggs actually say when they released their report? So here it is. What you can see is sales are up, good news for Q4, and like-for-like sales is up 2.9. So this could be a real cause for happiness, especially when you look at like-for-like sales for the full year at 2.4. The difficulty is inflation has been running above 4. Now it is coming down here in the UK, but I would say like-for-like at 2.4 is disappointing. You'll probably see other people saying it's good. I think that is disappointing. They believe the market share is growing, so there's a bit of good news, and there is growth there. So you can see that the net position is more shops opening, which is pushing greater growth. The capex, which we know they've been investing quite heavily in their supply chain side, has just made the year-end net cash position is reduced from 125 to 47. So if people thinking that Greggs is going to go out and do a big share buyback as the price went down, it's not going to happen because of their capex. Now that capex will reduce as it goes into 26 and further into 27 as they get their supply chain into a position where they know they're going to make operational efficiencies. So I think their cost ratio should improve as we go through 26 and 27. but that's not massively helpful in the short term for 25. I'm going to skip through the rest because the summary is pretty good. But the interesting thing here is this part, which is taking into account pretty much that any year-on-year improvement or degradation to the result will be based on the current financial economic climate of the UK economy, which is in difficulty at the moment. So overall, I don't think it's a terrible set of results. It's pretty decent, but I just keep looking, which is when you've got inflation running above your like-for-like sales, that's not a great position to be in. So what the analysts make of it, you can see down here, they're still pretty mixed. It's a bit of a mostly about holding. There's still quite a bit on the buy, a couple wanting to sell, and that range. Do I think it's going to get to 25? I struggle to see that personally. I think I haven't really changed my view of my last video, which I sort of thought it was going to be around the 20 to 21 pound mark. I think the average of £18, 50 just above, actually doesn't feel unrealistic. We've seen it pushing near at 18. I think over the 12 months, I think it'd be disappointing not to see it steady between 18 and 19 pound, depending on the shorters. The low looks pretty grim, but it got pretty close there as well at 14 pound at one point. So, is there opportunity? Really depends where you see Greggs and where your opportunities may lie elsewhere. It's still a very good dividend payer. I think you can get better dividend yields from alternative stock, but Greggs is pretty good. So I would say if you're in Greggs for an investment that's looking over pretty much a 2 to 5 year time horizon, I still think Greggs is a good stock to potentially invest in. Like I say, not investment advice. Do your own research. I still think there's opportunities there. If you're looking for short-term gain, I think you've got to watch it with the shorters who might take the price down a little bit too low. But if you're wanting and willing to take that short-term risk, it's there. I think the stock will drop. It will jump back up. Just depends where you buy in and want to sell. If you see yourself as a short-term trader, I see myself more of a medium-term investor. So I must admit, I have exited some of my position. I have trimmed it. I trimmed it when it was pretty much getting up to here. So if I take it out, I was sort of selling off around here just because it was just too big of a share of my portfolio. So I have trimmed it. If this stock was to fall below the £15 mark, personally, I think I might well go in, depending on other opportunities. Like I say, I still see Greggs as a good one, but it might just make you scream a little bit, and that's very much my feeling over a 6-month cycle. It definitely will make you scream because I came in around here. I've averaged down, as you can see, significantly. That's why my position got too big. That's why I had to sell here. And therefore, that's why I'm still very cautious from an investor. But I think if you've got a bigger time horizon, so that 2 to 5 years, I still think this could be a stock you might want to take a look at. So that's my Greggs update. I hope you found it interesting. It was a very quick, short, sharp snapshot of what Greggs' financial position looks like and where the stock currently stands. If you found it useful, please give me a like. It's all good. I really appreciate it. Feel free to comment on what your thoughts are. Are you a Greggs investor? What did you think over the last year? Are you looking to invest? What's your personal strategy and hopes for Greggs? And I'd love to hear from you. So irrespective of what you do, happy investing, and I'll catch you next time.